Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. In today's Stock Market Live, we have an earnings palooza this week. Amazing stuff happening this week. FOMC announcement coming up, which is also going to keep the volatility up. So if you're doing a good job of reading the tape right now, this has been just an absolutely amazing opportunity to be buying stocks and short selling stocks, or as we've been talking about, trading those inverse ETFs a little bit more aggressively because there's been some opportunity. We're going to hop right into the charts before we get into the meat of what we're going to talk about today. Stocks that have reported recently, stocks that are going to report today and tomorrow, a couple of big stocks coming up this week. But more importantly, we're going to talk about some of the opportunities and how sector rotation has been spinning on its head. And for those of you that are a little frustrated right now, it just means you need to level up your skill just a little bit. Inside of our community right now, we are, and I'm going to use this word very strongly, we're actually having some fun right now. If you understand how to read the tape, if you have structure for what the market needs to look like, you're not frustrated anymore because it either looks exactly the way you want it to look or you just let it go. And that last part is actually one of the most frustrating parts, I think, for most traders, is that when the market does not look like what they want it to see, and the stock market is kind of chaotic to them, and they continue to trade anyway. That, my friend, is where that money is slowly bleeding out of your trading account because you're not paying attention to that one situation where it does not make sense, does not match your edge, and yet you trade anyway. And kind of mentally, we kind of justify those ideas with less share size. Less share size means it's okay, but it's still a bad idea. Less money in a bad deal still makes it a bad deal. So we're going to review some of that today. We're going to talk about the big level in the S&P 500, the SPY ETF that we called out on Monday that we said that we need to hit. We actually came within 10 cents of hitting it yesterday and closing right there. And that's the big level we're going to look at. We're going to look at Microsoft stock today. Has Microsoft rescued the stock market, or simply has it paused the massive selling that we've had recently? We're going to take a look at that today. Remember, when we're in a big bearish move to the downside, which we are right now, we really have been since the start of 2022, other than the last Fed announcement, which we're going to talk about that today as well. It's been mostly short selling is better ideas. It's been momentum longs against a bearish order flow. And we're going to talk about how to involve yourself in that today as well. So, man, we have a bunch of stuff to talk about today. I'm very grateful for everybody being here with me right now. Stick around. We can be back in 1 second. We're going to answer all of those questions and set up your trading for today. Okay, so if it happens to be your first time here with us on the channel, please do me a favor, click down, hit subscribe, smash that like button, but only if we provide some value for you today. If we provide some value, make sure you hit subscribe and hit that like button. So we're actually going to get right into it. I want to thank everybody for being here with me today. Just want to make sure I say hello to a couple of people. Hey, John, how's it going? Good morning, pal. Jason, great speaking to you yesterday. Awesome. Looking forward to seeing you soon. And of course, my buddy, Minvai. All right. Let's get going. LJ, good morning too. How's it going, pal? Nice to see you here this morning. I want to get right into the charts because I want to talk about what we set up last week. Obviously over here, the SPY is, the S&P futures is actually positive. However, it sold off a little bit, and we actually got a good question in our community this morning. Let me see if I could share that with you. I want to pull it in and bring it in here. And these are the kind of things that are kind of advanced stuff that you talk about inside of the community. I don't know if you can see it perfectly here, but Jason was asking, on my way to work, how reliable is looking at the futures markets to try and get a hint at the possible daily direction in the overall market? And this is really the big thing here. So many economic numbers come out after 8:30 or even earnings reports, but let's say it's not a day where earnings are coming out. It's imperative that as best as you can, you look at the economic numbers at 8:30 to get a better feel for it, because we go through the whole gamut of how to do your research. Obviously, we talk about game planning the day before, and we're going to get into my game planning document in just 1 second. You want to have a good idea at night what you expect to have happen the next day, then come into the day, start reading headlines and take a look at the futures markets and kind of solidify what you game plan for, or maybe it's not what you're game planning for, and you might change your game plan from long to short or short to long, or maybe even just not do anything. Look, I have to be honest with you. I know John Bates is here with me today. There's a lot of times where sometimes it's better to go golfing when the market is chaotic and just overwhelming you a little bit, or maybe it just doesn't make sense based on what you think should be happening, there's nothing wrong with doing nothing. If you learn nothing else from me, I just want to make that clear, because again, over all the years that I've been trading, probably the number one mistake that I've made is over trading when the market was not perfect, and perfect means it needs to match your edge. So again, I'm going to keep saying this to you every day. What we talk about here is for educational purposes. It's up to you to make the final decision. However, and I want to get this across very clearly, when you know what you're looking for, you're not lost anymore. You will immediately improve your skills simply because you're going to be pickier about when you choose to buy the best stocks now. That's a fact. I don't care what how you want to spin it, what you want to put on it. If you only trade when your edge is there and you stop and don't care about any other circumstances, you're immediately going to trade with a lot more conviction, and best case scenario, you start to trade more profitably. Now, does that mean you're definitely going to make money if the stock market looks exactly the way you want it to? No, because even the definition of an edge means that most of the time it should follow through. Sometimes it doesn't. So you have both of those things. So let's take that over into the market right now. Obviously, the futures are sold off a little bit, but I want to talk about the SPY. If you remember earlier in the week, you can see we're actually bouncing here. We drew out pretty clear. We said 416, and we'll show you why. 416 has been the level that matters. Now, you hear a lot of people saying technical analysis doesn't work, and that's all BS. It's all other stuff going on. That's BS. So you can't ignore where a lot of people are putting their conviction, whether it's a support or resistance level, whether it's a 20, a 50, or a 200 period moving average. Even if you are not trading off of that level, you still need to be aware of that level because of how many other people are watching it and making decisions. So 416 held in the SPY. Now we have this bigger move to the downside. Let's actually pull that into the charts here. We have this bigger move to the downside. And again, we've been talking about this. This is basically the picture that we've had since the year started. So we're kind of like, let's just say right there. This is what we got so far this year. So it's mostly been bigger pushes to the downside. So again, if we bring this out a little bit further and we talk about the order flow has been 1, 2, 3, 4 months of bearish and one rally off of the last Fed announcement. And that's really what we've had. And you can see the weekly charts make it a little bit cleaner, where we got a push down and a pause, a push down and a pause, another push down, and we're resting right at that support level. So what is the big thing to look at right now? That 1 week, that 1-2 week period that actually bounced, that's the one we're going to focus on right now, because we have the Fed announcement coming up. And the last announcement, we were very clear to say, whether it's earnings, which we're going to talk about Microsoft earnings in a second, or a big announcement like the Fed announcement, what did price action do prior to that? And the question we all need to ask ourselves is, was it priced in? Now, I want to take that a step further, because a lot of people aren't sure what that means, if it was priced in or if we believe it was priced in. It simply means that, did price action anticipate what was going to happen? And then after the announcement, generally speaking, it'll move in the other direction. That's the big thing I want to get across, because if we take a look at the last Fed announcement and we drop down over here, the market sold off into after 2022 started. And this is the announcement right here. And this is the kind of price action that we got. So not shocking that, again, Microsoft, we're going to talk about in a second, but not shocking that it got down to this level held and earnings came out. And now we're looking like we're going to see a little bit of a bid. So what I'm expecting right now is bullish momentum against the bearish order flow. Now, this is the important part here. And we're going to get into Microsoft next, I promise. You need to recognize, remember we just talked about only trading when your edge is there. You also need to recognize, what type of edge do you have? Are you trading with today's price action and maybe the last couple of days? Or are you trading with the last several months where real buying or selling pressure pushed the market around? And that's the dominant force in the market right now. Right now, the dominant force is bearish. Right now, the dominant force is selling pressure. If we happen to have rallies in the context of that big selling pressure, that means that we have to adjust our risk that we're willing to take and adjust our profit targets based on the fact that we're trading against the bigger move to the downside. You can still take those trades. There's still a lot of good catalysts in many of the stocks that we're looking to buy, but we can't ignore that bigger move to the downside. So that's going to take us now into Microsoft, and we're going to take a look at what happened over there. Now, remember, a lot of what we talk about all the time is guidance, expectations. That's the big thing, right? Expectations is what we talk about all the time, and guidance. I want to zoom this in because I really like to really bring this point home. Anytime we're looking at earnings, and again, if you happen to be new to the channel, this is the first time you're here, we do a lot of conversations about what we call building an argument. And then based on that argument, we look to determine whether or not we should be a buyer or seller or take profits or leave it alone. When we're talking about earnings, if earnings interpretations are new to you, if you happen to not be an accountant, I'm not an accountant, but I want to know what earnings mean as a stock trader, as somebody in the stock market looking to buy and sell positions off of the earnings catalyst, guidance and expectations are what you're looking to see. So if we go to Snapstock last week, guidance and earnings were not good, but subscriber growth was good. Netflix subscriber growth went down. Netflix got hammered. Looking over at Microsoft, we're looking at the raw numbers of what was expected. Did we exceed expectations? And that's going backwards. And did they give good guidance? So those are the 1-2 punch when we're talking about what we're looking at. So if we bring that into Microsoft, beating expectations is going backwards. Guidance is going forwards. So if you think about those two things, expectations beat. So that's growth percentage. I want to be clear about that. It's not just a matter of they were supposed to do $1 billion and they did $1.3 billion. That's good. But what was the expectation? Was it supposed to be they did $1 billion and they did $1.6 billion, which is higher than 1.3? That's a big difference. So you need to know the growth expectation. So there's what they did, which is the expectation, and the guidance going forward, which is what we're buying right now because we're buying tomorrow's cash flow. If you want to learn anything about earnings, for lack of a better way of putting it, try and focus on just those two things. And now I want to go back to what I said before. Those are the perfect scenario. That's the perfect area of earnings announced. Great. The two-legged monster that we need to hang on to those stocks or to have conviction and follow through in those stocks. That's what we're looking for. So Microsoft had both of them, but that's the point I want to bring up. If you don't have both of them, you can kind of expect the stock to do this or even go down. Look for perfect. And again, I want to say this one more time because I think it matters that much. When you know what you're looking for, you're not lost anymore. That's how you improve your skills as a trader, is learning what to look at, then learning how to make money off of what you look at, which is how to make the stock market make you money. There's a difference between I understand what I'm looking at and I understand how to get paid and I understand how to take the right risk. So Microsoft in this instance beat both, but the chart of Microsoft, and if we break this down a little bit deeper and we zoom out a little bit and we go out to longer term order flow and we're looking at the last several months. So Microsoft has traded with the market. A lot of the large cap stocks trade directly with the market. So how do we tackle a Microsoft trade right now? After Microsoft reported, we just said expectations were good, guidance was good, everything looks awesome. But the order flow for 2022 in Microsoft is bearish. So we have bearish order flow, short-term bullish momentum catalyst. So the phrase that we use is this is the first sign of a reversal. That has to be first position size. So that's how I attack these ideas, where if it looks like it's reversing, and I'll just use round numbers just to keep it simple. If I know I want to build up to 1,000 shares, I want to start working my way into a position, but it's the first sign of a reversal, then that would be first position size for me. So maybe I'll go in with 250 shares as opposed to 1,000 shares because I do not have the longer term buying, in this case, buying pressure on my side, but we do have a short-term reason to want to look at Microsoft. I'm telling you right now, we get a bunch of people coming into the boot camp who are really smart, really nice people. They just don't understand that every situation is different. Once you understand, and again, I'll use driving as an example. Once you understand when to step on the gas, when you're in stop and go traffic, how to do that, when you're in a rubbernecking delay, it's raining, it's snowing, there's ice on the road. When you understand those different conditions, it's not as simple as you get in the car, you point it forward and you step on the gas. Far too many smart people in the markets think that that's what trading is. I like the stock, I'm going to buy it. I don't care what it did. I don't care where it is. I just want to buy it. And that's where you get into trouble because you're not assessing how good the deal is. That is one of the simplest and most important things you can do. Should I accept risk? Yes or no? Yes. Okay. How much? Based on what kind of profit can I reasonably expect? So when we're talking about Microsoft right now, Microsoft has had selling pressure coming into this earnings. The earnings are good right now. And you can see that we're up 10%. We're actually up a little bit more. And we're kind of hovering right at this big level where buyers have been stepping in over here. So you can see it stopped it again yesterday and came back. So that means that right now, for me personally, again, this is education. You make your own decisions. For me personally right now, this Microsoft reversal, best case scenario. So now we're mapping it out from start to finish. Best case scenario, Microsoft goes well bid today. That means that I want to see the Microsoft stock make a higher high, a higher low, and close near the high. So now at least I have some data, some feedback. The market is telling me, yes, buyers stepped in. The story has legs. If that happens, that's when I will start to look to build a position. And the low from yesterday prior to earnings will most likely end up being my initial stop loss. So that's how I'm building my idea into Microsoft. So if you take nothing else out of this video, and gosh, I hope you take a lot more than that, you need to understand, ask yourself, I'm sure everybody on this call right now or watching the video has a trading account, right? You hired yourself as a money manager. You need to up your game. You need to improve your trading skills because look, I mean, if you're like me, you got a little bit older, you're looking to be semi-retired. You're looking for a plan to make things easier when you're on the other side, or maybe you're just looking to pay the mortgage or, make a payment on a Tesla. Who the heck knows? But you need structure. So hopefully what I'm giving you here is the structure to first determine, should I place a trade? And then what kind of trade should I take based on order flow, current momentum, and optimal entry. So those are the keys to placing orders. So that's how I'm mapping out Microsoft this week. So again, I want to be clear. If you're on my trading floor, if you're in my Discord community, we'd be talking about this. We'd be saying, okay, I like it, but it wouldn't be full share size yet. And then we build the argument and we map that out. So we've already mapped out the next 2 days of price action in Microsoft based on Microsoft earnings. We're looking to see, do smart money buyers step up and hold it where it is? Now let's hop on over to Tesla and take a look at that same type of conversation because there's obviously a lot going on here since earnings. Earnings were amazing, but now with the deal with Twitter, they're actually getting hit pretty darn hard here because now they're talking about the amount of personal funds that here. This is the big thing right here. This is the part of the story that a lot of people are not liking. Musk's portion includes a $12.5 billion loan secured by his equity stake in Tesla. So he's securing the loan with his shares of Tesla. And that's a pretty big hole to be digging yourself into. And let's put this in perspective as well. Maybe everybody want to comment on this in here. They've not been able to be massively profitable. Otherwise, the stock would not be floundering between $30 and $40 for the last however long it's been there. He's talking about opening it up, making it more like a universal town hall, and all of that's great, but they still need to monetize it. So if you're a Tesla shareholder right now and earnings were amazing and you're seeing this happen to the stock, you cannot be a happy shareholder right now because this is being affected by this. I would not be very happy about that right now. How does everybody here feel? Let's see. Frank is saying ego. Yeah, I honestly, I agree. I absolutely agree. I mean, look, let's face it. I know we have a lot of entrepreneurs on the call right now and a lot of entrepreneurs in our community. I actually want to make sure I say hello to John. Hey, John, good morning. How's it going, pal? Why did Jack Dorsey start doing SQ block? Why did he leave to just go block full time? Running two public companies and having your head in both of them is very, very difficult to do. So I would not be a happy Tesla camper right now. And Twitter, yeah, maybe, I don't know. I would not be a happy Tesla camper right now. That's just my my take on that. So let's actually jump on over to some other ideas. I want to talk about sector rotation today. We're actually going to talk about Lucid, which is actually up quite a bit this morning. This is a big deal. We're going to see if we get some follow through there as well. So again, remember expectations and guidance when you're looking at that. Let's take a look here at the performance coming into today. Yesterday, not horrible. Yesterday, where everything was pointing down for the last 5 days, that typically, and one of our members, Dilip, actually runs these kind of statistics all the time. I'm not sure if he's on the call with us right now, but once we get these kind of days where the entire boat is on one side, generally speaking, we get a short-term reversal in the other direction. So it's going to be very interesting with this kind of reading that we've seen over the last 5 days in the market where everything is negative. Do we get a bullish bounce off of that level? Let me see. Kicking his profit trade, not good. He should delegate to someone else to focus on. Yeah, I agree. I absolutely 100% agree. Look, I've been an entrepreneur since 1988. It is a lot of work. I know John Bates is here and a few other people that, Min, I know you're running businesses as well. You're doing your real estate investing. Entrepreneurship is tough enough, but now he's kind of playing with monopoly money at this point. It's going to be really interesting to see how it unfolds. It really is. Anyway, let's get into some more ideas to talk about today. I want to mention some stocks that are actually having a pretty decent morning around that. So we're going to look at XPEV, up 3.5% right now. We're going to take a look at NEO, also up 2% right now. But more importantly, we're going to take a look at LI. LI is up almost 5% this morning. So we are actually getting some bids in here. So I want to talk about that now. These electric vehicle stocks have bearish order flow. They're getting hammered along with Tesla over the last week or so. But the LI news, in case you didn't happen to see that, again, we talk a lot about is this good for the whole group of them where they're actually going to have 100,000 shares. I think they talked about 50,000 shares over 2 years, 50,000 with an option to buy another 50,000. So look, I mean, that's a big adoption of somebody who could spend a lot of money to start to gather these EV vehicles. So how does that translate into the best stocks to buy now, today? We are now looking at reading the tape. This is the difference between order flow and tape reading. Tape reading now, we're just down to those micro time frames, or again, it could be a monthly reading the tape, a weekly tape. Right now on the electric vehicle stocks, the Chinese electric vehicle stocks specifically, we're not even going to talk about Ford or General Motor right now. I am looking for those stocks to catch a bid today off of this news if they meet certain criteria. And I'll just give you a really easy one without getting into too much depth. If they're above VWAP today, I'm going to look to be a buyer of those stocks today. This story could potentially have legs, as we call it. These stocks could catch a bid for a couple of days, and maybe we can trade some cash flow on the long side of things by buying NEO, LI, XPEV, maybe even Tesla. Tesla got hammered yesterday. There's a lot more going on around Tesla right now as well. Let's see. Bob is saying, disgusted by the thought of my got so negatively affected. But yeah, I agree. I completely agree. And I'm actually glad that I put that out there into the universe today. We'll see. We'll see. All right. So let's actually, I want to continue some more ideas. So again, the concept and the idea that we're looking at here with these guys today is I'm looking for what we might call momentum trades. So momentum trades, reading the tape in LI, NEO, XPEV, maybe even Tesla, but I'm not touching Tesla long-term right now because of this story. So I want to be clear. If you were in my game plan today, we'd be talking about buying these stocks above volume weighted average price, looking for day trades, and then looking to kick in with the profit maximizer to hang on to those profits. Okay. So the other story, obviously, was the big dog yesterday. Let me get these guys off the screen. Is this guy right here, Alphabet, Google. Again, what were we talking about here? Expectations. Okay. Now, IBM had earnings earlier in the week, and IBM earnings on their cloud business was pretty darn good, and it held the bid. We want to see if we can get back above 137, but IBM earnings actually were out good because of the cloud business, and Alphabet slowing sales growth on digital ad tumult. Now, look, I mean, we all know Facebook is coming out, right? FB, Meta Platforms, has earnings coming out. They are getting impacted in a pretty dramatic way because of all the security that's getting put on. And we know the iOS update that is blocking the Facebook pixel on the phone. Google and a lot of other browsers right now also give you that option to hide, so they're not tracking what you're doing. Of course, they're going to be affected by that. That's how they're selling the data to marketers who are using that data to spend money on their platform. So it's going to be interesting how these things play out. And obviously, Facebook is coming out with earnings as well. So we're going to let that dust settle as well. But what does that mean for Google? Let's take a look at Google and whether or not there's a trade in there and whether or not it's a longer term idea. So if we go back out to the longer term order flow, Google has actually broke down harder and is heading down even further than even what we saw in Microsoft before. You can actually see some pretty clean pushes and pauses, and we took it out. Now, the big thing is, where is the next magnificent level that buyers will most likely step in? You can make a case for over here, which even that 22.17, that's another $50 or $60 down. I would say this area over here is really the next big support level. I mean, if we really want to get into this and draw this out on the weekly time frame and go all the way back here to the pandemic low, we're talking about right there. Actually, how ironic is that? That was not planned. Trust me when I tell you that was not planned. That was just actually working the charts, but that's a part of doing the game planning. We noticed that this here is the significant place that buyers did something significant. Now we actually put in a Fibonacci retracement from here to here, and that perfectly coincides with the 50% level, which is just below 2,000. So that's another $210 or something along those lines, maybe even a little bit further down. So I'm really looking at Google now to have a little bit more downside. So what does that mean? Well, if you understand buying puts, if you understand short selling the stock, looks like we got some more room to the downside because it's what we call well offered in multiple timeframes. So again, this is the situation where if all signs point to the bears are in control of that stock and you are what they call long only, where you're only looking to buy stock, this is probably something that you want to step aside for right now until we see buyers step in and we get some feedback so that we have a spot to manage risk. That's a big thing there. Also, I just want to cover that one more time, because when you have stocks going down and you are looking for a spot to buy it because you like it for whatever reason, right? The reason that I am constantly talking about the way I'm looking at the ideas is I want to see some validation that the stock has reversed. I want to see some smart money from one day to the next, best case scenario, 1 week to the next, to hold the stock up and pay higher prices for a significant amount of time. Now, again, that could be a couple of days. It could be a couple of weeks. But why? Why do we do that? Why do I do that? Because we need a spot to manage risk. Without a spot to manage risk, you are just hoping a stock moves in your favor without regard to the downside of the deal. That's not good investing. That's not good trading. If you want to be smart and elevate yourself, and write this down, take this one to the bank. Professional traders manage risk first. You have hired yourself as a money manager, and hopefully you're watching these videos to understand how to improve your skills. And again, let's keep using that word. My friend Joel uses semi-retired. I love that phrase. Nobody wants to be fully retired, be bored out of your mind, and we could use the stock market as a way to keep busy. You need to first have a spot to manage risk in the context of the idea. Otherwise, you are only looking at one side of the street, and if that stock continues to go down, you're going to get crushed, and we don't want to see that happen. A good example of that right now is this stock right here, where a bunch of people got long the stock at the end of last year and did not prepare, did not have any kind of stop loss, did not have any reference point for if the stock rolled over, what do I do? And the stock went from 221 down to, let's just call it 80. That's a $140 move to the downside, and it hasn't recovered since then. So write this down. If you write nothing else down that we talk about today, you're aspiring to be a professional money manager. You've hired yourself to be a professional money manager. That means job number one is managing risk. Professional traders manage the downside. Amateurs only look to see how much they can make. There's no other way to put it. And I hope you're aspiring to improve your skills as a money manager, because you hired yourself. So you have to, every day you have to get in there and improve your skills. I just wanted to, somebody was asking about, where the heck was it? I think it was DraftKings. Let's just take a quick look at DraftKings. I'm sorry, I lost the DraftKings, and we'll take a look at DraftKings and Nvidia. We'll take a look at both of these. So again, if we could talk about this as a community and take a look at this on, let's go out to the weekly chart and look a little bit longer term. Here's the question that I want to get across to you. Can you look at this stock right now? And we're going to pull it up like that. All right. Can you look at the stock right now and say buyers or sellers are absolutely in charge of that stock? Ready? Go. Clearly, sellers are in charge of that stock. So let's go back to what we just said a couple of minutes ago. If sellers are in charge of that stock, but for some reason you did your research, you dug a little bit deeper, and you like the idea, Smart trading still says to let it finish bottoming out, let smart money come in, pay higher prices. Best case scenario, also with volume, let that happen for a couple of days, maybe even let that happen for 2 weeks. Now you have some validation that the water's a little bit okay for you to dip your toes in. First sign of a reversal, first sign of your position, first piece of your position. At least now you have a risk point. If it rolls over again, and a risk point and a little bit of feedback because somebody paid higher prices. The next thing is to determine, is that short covering versus is that new buying? So if we're taking a look at DraftKings and we actually end up getting some buying, let's say it rallies for a little bit, that's people getting out of the short sell. So when you short sell, you have to buy it back to get out of the position. But what you want to see is you want to end up seeing something like this, where there's more than just 1 or 2 days like you had here. That's short covering because we didn't push up, pause, and follow through. Same thing with Nvidia. Somebody was just asking about Nvidia. Clearly, you can look at that chart right now and say sellers are in charge of this stock. And you'd have to be waiting now for either a reversal like that, what we call a bullish U-turn, something like that, where you see 2 weeks of selling into a U-turn, 3 weeks, 4 weeks of selling into well bid. So you're looking for this, or you're looking for this before you look to buy this. That's really the bottom line. That's the way I do things. Again, this is for education. I'm not telling you what to do. I'm telling you how I map it out. If that stock is still going down, I need to see some sort of validation that somebody with deep pockets and a lot of research has now decided to step up, pay higher prices, and hold it there. Everybody on this call is not, I'm not going to do that. I'm not going to turn around Nvidia by myself, but it's pretty easy to map it out what you need to see before you decide to go into that deal. Remember what we talked about at the beginning of today's call. You're a money manager, and you need to decide how awesome is this deal right now. Is it crazy obvious where buyers are just stepping up 1 week after another week? And again, let's zoom this out a little bit. There's the reversal we're talking about after the selling. Boom, 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 boom. 4 weeks of buying, that's obvious. That's 4 weeks of selling. That's not obvious to be a buyer. So while you're seeing this, the next thing I'd want to see is this and this. If I see that, then I could reasonably have a little bit more conviction to get in there and dip my toes in there. Again, I'm not your financial advisor, but if you want to improve your skills, this is what we do every day. So if you haven't done it yet, please do me a favor. If you find some value out of this stuff, please make sure you hit that subscribe button, hit the like button. I would really, really appreciate it. But more importantly, I just want you to know, I hope that I'm giving you value every day to at least think about things differently. And here's the biggest thing that I want to leave you with today, because I have to get ready for our other game plan meeting. You hired yourself as a money manager. Ask yourself, what do you need to learn to improve the consistency of how you get results in the stock market? That's the big thing right now. Don't just ask yourself, or just don't say that made money, that lost money, that made money. Ask yourself why and how can you make more next time? How could you make a better decision next time? That is where you start to see massive improvement. If you want my help with that, I'd love to see you in the boot camp, which starts next Monday. You can learn about that below. If you don't, I'm perfectly okay with you staying here in the YouTube with us, because look, the bottom line is I love doing these calls and I hope you're getting value out of it. I know Scott was actually in a boot camp with us a couple of weeks ago. Thank you so much, Scott. I really appreciate that. Kathy Burns, good morning. How's it going? Good morning. Good morning. How are you? All right. John Bates, my buddy, I'll see you in a couple of minutes. I'll meet you at the 8:30 game plan meeting. All right. LJ, I'll see you soon. Thank you so much. All right, everybody. I have to take off. I have to get ready for our other call. Thank you so much. Again, if you find some value out of this, make sure you subscribe and hit that like button. And more importantly, if you get some value out of this stuff and you go and use it, leave me a comment below the video. I'd love to hear from you. All right. Have an awesome day, everybody. I'll speak to you soon. Thank you so much.